Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with EURUSD currency pair. Jakub Novak presents.
Today, the euro can be bought when the price reaches the 1.1663 level, green line on the chart, with a target of 1.1707. At 1707, you could plan to exit the market and also open short positions, expecting a 30-35 point move from the entry point. The euro may continue to rise after weak US statistics. Before buying, make sure that the MACD indicator is above the zero mark and just beginning to rise. You could also plan to buy the euro today if there are two consecutive price tests, a 1.1642, while the MACD indicator is in an oversold zone. This would limit the pair's downward potential and lead to a market reversal upward. Growth toward 1663 and 1707 can be expected. You could plan to sell the euro after the price reaches the 1.1642 level, red line on the chart. The target will be 1607, where you could plan to exit the market and open a buy position in the opposite direction, expecting a 20-25 point move. Pressure on the pair could return at any moment. Before selling, make sure that the MACD indicator is below the zero mark and just beginning to decline from it. You could also plan to sell the euro if there are two consecutive price tests, a 1.1663, while the MACD indicator is in an overbought zone. This will limit the pair's upward potential and lead to a downward reversal. A decline toward 1.1642 and 1607 may then occur.
And we're starting with pound sterling dollar pair with Tin Leo.
On the hourly chart, the GBPUSD pair on Monday reversed in favor of the British pound, consolidated above 33.41-33.52 level, and rose toward the resistance level of 1.3437 and 34.65. A rebound from this zone today would favor the US dollar and lead to some decline toward 33.41-33.52. Consolidation above 34.37-34.65 would increase the chances of further growth toward the next resistance level at 1.3526-35.39. The wave situation is starting to shift toward a bullish scenario. Loss completed downward wave. Failed to break the previous low, while the new upward wave broke the previous high. Thus, we're beginning to see the first signs of a bullish trend. The information background for the pound has been weak in recent months, while geopolitics gave bears a clear advantage in the market. However, the war in Iran may end soon, and the Strait of Hormuz could be reopened by American naval forces. On the 4-hour chart, the pair has returned to the upper boundary of the downtrend channel. A rebound from this line and the 1.3369-34.35 would favor the US currency and lead to a renewed decline toward the 1.3118-31.40. A close about the downward channel would suggest the end of the bearish trend and open the way for growth toward the 127% Fibonacci level at 1.3795. No emerging divergences are currently observed on any indicators.
That's all for today. See you online soon.